Right, okay, let's begin and let's play around with this equation. Let's just sort of get comfortable with the accounting equation. This is going to be a very short video, but just playing around with the accounting equation before we start looking at revenue income and revenue expenditure. So we have agreed that assets are equal to capital plus liability. And let's just, mess around. So we start this business. The owner invests £10,000 into the business. That £10,000 is in the bank. This is a piece of paper saying the owner is owed £10,000 by the business. And the business borrows some more money from the bank, let's say £50,000. And that's the £50,000 that goes into the bank account. So this is a piece of paper saying that the business owes a third party or a loan company £50,000, and then you have 10. So for example, let's buy a machine. Now, buying a machine is just the transfer of one asset, the asset of money, into the asset of the machine. So I'll just use a different color. So if we go, okay, that's not very good. All right, great. So let's take machine, and the machine is worth 20,000. So 20,000 leaves the bank, and then you have a machine worth 20,000. So what we now have is this scenario. We have 40,000 in the bank, £20,000 machine, and this is still equal to 10,000 plus 50,000. You could decide to pay back some of that loan. You might think, you know what, we don't actually need 50,000. We just need 40,000. We don't want to owe 50,000. We just want to owe 50. So you return, if you like, 40,000 minus 10, return 10,000. And if you pay back 10,000 to the loan company, well, you also have to reduce the liability by 10,000 because you don't owe 50,000 anymore. So what you now owe, if you like, is 40,000. You borrowed 10,000 from the owner, and this is now equal to 30,000 in the bank and a machine of 20,000. So you can see how the relationship or the equation remains the same. So if you like, this equation is really helpful because we use this equation to discuss movements in accounting. You can see all the time two things are happening. Two things always happen whenever a transaction occurs. You have that 20,000, you have that 20,000, you have that 10,000, you have that 10,000. So in accounting, I guess to keep an equation balanced, two things must always happen to keep this equation balanced. Either something is happening on this side and something is happening on this side, or two things are happening on this side, or two things are happening on this side, like you have here. But here you have one thing happening here, one thing happening here. You have both things happening on this side. And so that's what an equation is really all about, making sure the equation is constantly balanced. Okay, that's the end of that video. What we're going to do is we will now move into looking at revenue income and revenue expenditure from the point of view of the accounting equation. Okay, great. See you in the next video.